Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday, and it's October 23rd. We got a very quiet day today, actually. There's no economic news release scheduled for today, so pretty much our take will be on the earnings reports. So, of course, stock market's a bit mixed. Early morning, it actually was up. All three indexes were up, and a lot of it had to do with the Japanese global stocks in general were up primarily because Japanese Prime Minister Abe was reelected, and he has been pretty accommodative. So they like obviously the accommodation, which is kind of driving the stock markets in that area. Also, the talk about optimism for tax reform has been coming out, but since the morning's come out, some earnings reports came out a little mixed, and then there hasn't been any more talk today so far about tax reform. So now a few of them, the S&P and Nasdaq, kind of pulled back where the Dow is still going upwards. But Friday was the first day that all three indexes, or not first day, but all three indexes were hitting new highs. So they're taking a little bit of a breather. This week is kind of for the most part, kind of a light one. We got some housing data coming up this week, and then a big one will probably be the first view of the third quarter GDP coming in, and I believe that will be Thursday. So stay tuned for those ones. But today happens to be kind of more of a quiet day, so to speak, and just taking more of its cues from earnings reports, and of course, any more possibility of talk on the tax reform here. Let's see how this is affecting the bond market. Bond market's up about 8 basis points. We started the day below the 200-day moving average. Since we've gone up a little bit, and hopefully we can keep it close above it because it will help help provide basically a floor of support. So it'll help boost us a little bit higher here if we can stay above that. So let's see how the competitors doing the yields. And right now, it started the day up higher than the ceiling here, and now since it's been down. It's down to it was at about 230, 238, 2.38, and right now it's down to about 2.37. And hopefully, again, we don't want breaking above here because if it breaks above here, this threshold here, it's going to give it a boost and go further up, which will take more money away from the bond market and drive interest rates higher. So if we can keep this in this range here, it will be a lot better for all of us. As you can see, we're at a pretty high range right now. We haven't been in quite a while, even back in July, August. For several months we haven't been this level here. Probably not since around June have we been this level here. All right, so interest rates not quite, I would say, better yet, but maybe a slightly better or mixed, I would say, today than what we left off on Friday. So that pretty much kind of wraps it up. But if you guys want to get more data, just come over to Twitter and find me under my handle, Mike Bjork. You can get updates throughout the day and see what the latest and greatest will be. All right. Thanks so much for watching. We just want to kind of keep it short and sweet for you guys, and hopefully you guys enjoyed, and we'll look forward to see you guys tomorrow. Bye-bye.